The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Friday morning, October 1st. We kick off a new quarter. 9:06 a.m., 24 minutes until the start of trading. We have all the markets in positive territory to kick things off. This has been a theme this week. Positive territory overnight. Come into opening bell. Not quite the same story, though, as we've seen, whether it played out on Tuesday. Wednesday, we got some choppy action. Yesterday, an acceleration begins at about 11:30 a.m. We're trading at 43.52. You make it down almost 100 points to 42.60 overnight. Right now, you have the S&Ps up 16 points on the session at 43.14. NASDAQ 100 slightly in the green as well, 14,717. You were lower actually overnight, so a little bit of a reversal from what we had seen on previous evenings. The Dow catching a little bit of a bid in the last 6 hours or so. You were down at 33,389. Look at that acceleration in the Dow from 3 a.m. Eastern time. Things looking pretty dire. We're now positive 135 points, and you get the Russell really catching a bid. We had some huge swings when you look at the Russell and the Dow in particular. The NASDAQ was down about 150 points below where we're at right now, and you have the S&Ps. You're talking about 53 points below where we were at, so we were negative about 40 points at the lows overnight. Crude trading back a bit, quite the pop yesterday in crude. Look at that acceleration from 9:30 right out of the gate. You trade up $2.75 until making a high at about 1 p.m. Eastern time of just above $76. We're trading right now at $74.50. Gold contract flat at $17.56. Gold had quite the run yesterday to $17.65. We jumped to silver, up 41 cents at $22.46. And notes and bonds, a little bit of a reprieve of the higher yield. Today we had higher price and lower yield. You're talking about a yield right now of just under 1.5%, 1.493 to be exact. Taking a look at the 10-year on your daily, you see a little bit of a pop. But man, considering where we've come from, you back it up to the beginning of August, you had a high of 135.14, right? So think about that, 135.14 all the way down to 131.07, more than 4 full points to the downside, and we've just popped. Back to a 15 minutes, less than a point from the lows. 131.07, we're still with a 131 handle, but climbing to that 132 price level, 131.30 in the 10-year. And we got to talk about Bitcoin, up $4,000. Look at that pop from Wednesday, overnight. Tuesday into Wednesday, we were at 40,000. Wednesday into Thursday, we were at 40,000 handle on Bitcoin. And just like that, things really escalating at about 3 a.m. And then that huge pop at 6 a.m. this morning from about 45,000. We're now at 47,650. You take a look at Bitcoin on a daily. You back it up to this run it had from July up to the high of 53,000, September 7th. Remarkable volatility. You can't overstate it. We back up to the 50%. We're off to the races again. We're coming up to this area in Bitcoin. We were at middle of September. That high, 48,600 in Bitcoin. And man, you back it up to September 7th. That's a bar we're getting into as well. And that is the daily bar that we got up to that high of 53,000, folks. But guess what? We closed out that bar at 46,850. Just taking a look at Ethereum. As you have Bitcoin rocking, you got Ethereum up to 32.55, catching a bid as well. A little bit of a divergence in terms of Ethereum versus Bitcoin. All right, jumping around to what else we got going on. So it is the first trading day of October. We start a new quarter. Talking about technology, we have the NASDAQ 100 slightly in the green. Cathie Wood's flagship, highest quarterly outflow on record. Not really a huge growth bull indicator for those tech stocks. Had almost certainly just recorded its biggest ever quarter of outflows, $1.97 billion, almost $2 billion, leaving the exchange-traded fund through late September, and that arrives with a one-day lag time. So combining it all, anything less than $125 million inflow will make September the product's worst month for outflows since it launched in 2014. and you see what we're talking about in terms of that's the ARK Innovation ETF monthly fund flows. You look what was happening, folks, back in December, January, February, and look what's happened since. Not what you want to see if you're talking about sustained strength in the tech sector. Let's jump around to some of the FANG stocks as we kick off October trading. You got Amazon right now up a few dollars at $32.88. Amazon backing this up even a little bit further, just right back in this consolidation for Amazon. Amazon, the lower boundary line of that consolidation, maybe 3,000, maybe a little bit below that price level. The upper boundary, 3,500. You got into that higher price area right as Basil stepped down and handed the reins over to Andy Jassy. Spiked to $37.73. They come out with their earnings back in July. Expenses on the rise, and you have Amazon pulling back to basically the middle of that consolidation area at $32.85. Back to the short-term time frame, checking out the big dog Apple. Apple this morning up about 30 cents to $41.87. You had been as low as $140.53. Taking a look at the daily in Apple in terms of where we are, we're coming right back to a 50% retracement of the run that we had since May. You were up to 157, just like that. You give up 10%, just like that in Apple. And man, when you talk about 10% in a company like Apple, you are talking about hundreds of billions of dollars in market capitalization wiped off that company. 10% right now, and that's at a lower valuation number, is $234 billion. I'm guessing this thing was probably approaching somewhere in the neighborhood of $2.5 or $2.6 trillion market cap at the high. So just like that, $200 to $300 billion wiped out in people's accounts for market capitalization. The 50% retracement, 140. The 60% retracement, the 618, I should say, 136 in Apple. I point that out because 136, you're talking about an area that was an area of resistance, backing things up to April of this year. We spiked at about 137. So maybe that's where Apple rests. We're already into this bar we had in January. That's a high of 145. And you back things up to all the way in August of last year, about 138 was the high there. So right back to this level, whether it's 138, 137, right now we're trading at 141, and keeping in mind that 136 is the 618 of that full retracement, the full run we had in May in Apple shares. Jumping over to Microsoft, had some volatility recently. Taking a look at the run that Microsoft has had since May. We're back to about the 382, so not quite as big of a pullback as you had in Apple. This is a weekly. Let's put it on a daily. Zoom in on that action to get some clarity. 280.35 would be the 382 for Microsoft. This morning, we're up about 50 cents at 282 right now, and you see similar action in terms of, you compare this in terms of Apple, not as similar in terms of where we go if we break below these levels. Next stop in terms of where we were in April, you're talking about 263. That's the high point, let alone if you get back to even where we were just in February of this year. You're talking about 245. Microsoft kicked off the year at about 220, and we'll jump to Google as we wrap up the FANG stocks. Google potentially breaking out of this uptrend channel it's been in basically for a year from September last year. Well, before we do, let's put this on a daily for comparison. The run that it's had since May, Google's risen from about 2,200. Google just at the 382 of that run from May as well. Google, though, you take that Fibonacci number off there. Let's remove that drawing. Let's back things out. Zoom in on that channel. That's a defined channel, folks. Even if you take it from January, you take it from March, and Google pretty decisively trading from $29.36. You're down almost $300 again, about a 10% pullback right now from the highs in Google. Only another $30 or so, but Google breaking below that trend line. See where we go from there. We'll be coming back, folks. Stay tuned. Friday trading, October 1st. I'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. As yesterday wraps up the month of September, jumping over to the S&Ps. I'm going to put this on a monthly to see the context of where we're at. And you're looking at an S&P. Keep it in context, as in, yes, we got quite a red bar. You take back a month and a half of gains back to July, right? But that's only the 4th red bar we've had since the lows of COVID, folks. Quite a run. You got to expect a pullback at some point. It seems all but natural. You would get a pullback when we have the Fed beginning to taper. We have unemployment benefits not where they have been. We're still dealing with jobless deals. We're still dealing with, unfortunately, the virus in some capacity at least. Volatility, as we speak of, jumping over to the VIX. Now, this is a monthly that looks skewed. Let's put it on a 3-year weekly to see the run that we've had. You got a VIX right now at 2244. As you see, we had a series. If you back things up to basically November of last year, now that is when we got the vaccine efficacy. Okay, we had a series of lower highs, 41.16. Then we spiked to 37.51 in February, almost 32 in March, almost 29 in May, 25 in July, 24 in August. Oh, but guess what? Yeah, we just got a spike to 28.79. Excuse me, so almost back up to where we were in May. And that's followed by a second week that we got some price action where we have a spike to 24.89. That's action to pay attention to, folks, as we proceed in this market. S&Ps, all things considered, boy, you want to scare yourself. A 382 retracement of the run we've had, folks. It's talking about almost 700 points below where we're trading at right now. But again, that would still be almost flat for the year of 2021, and that would still be a rise from where we even opened 2020 at 3,200, so you'd still be up more than 10% where we were there. All things considered going on, it's possible. That's the only thing you want to keep in mind when you're talking about 3,600. You'd still be up 400 points from where we started 2020 in an environment that, yes, business was going well, but now we're dealing with the front that we're still not making up the jobs we once thought, and we have rising inflation and rising wages to go along with it. All right, jumping around to some of the stories we got going on this morning. Merck, seeking emergency authorization for an oral COVID treatment after compelling results in trials. I heard 50%, yes. Reduce the risk of hospitalization or death by around 50% in COVID patients. An oral antiviral treatment showed it reduced that. They plan to seek emergency use authorization in the U.S. and submit marketing applications to other global drug regulators. As this virus is going to proceed, folks, and going to be around. Hopefully we see more news like that to get a hold of people who are sick. And you got Merck up about $6. There's your weekly on Merck, stretching back. We'll put it on a daily for the last year. We come into yesterday at $75. We're going to open above anywhere we've been in Merck going back all the way to January, folks. We had a high in Merck in May of 80.34. We got a bid ask above 81 right now as the market liking the idea that I think they'd be the only oral treatment, something like that. I mean, there are treatments, whether it's monoclonal antibodies, right, or I believe there's a treatment you go in for hospital stay of 5 days to get some antivirals, but hopefully something like that, an oral treatment to prevent severe disease. Let's get into it. 7.3 of patients treated were hospitalized within 29 days and 14% hospitalized on the placebo. It's only 775 trial participants, but interesting to see the market liking that idea, though, and it makes sense. This is unfortunately going to be around, and we just got to get control of it the best we can. All right, I'm going to jump into a story, folks. How about auto sales? Auto sales forecast to plummet in third quarter as chip shortage plagues industry. There's some pretty startling statistics in this industry right now. Vehicle sales from July through September were less than 3.4 million, down between 13 and 14% from a year earlier. There was a massive fall in September due to an ongoing shortage of semiconductor chips, as we've all heard. Edmunds expects General Motors and Ford to have the largest third quarter sales declines of 31.5% and 29.3% respectively. Yes, I'm walking you through the numbers because we're going to do the math on what type of money we're talking about, because I did the math reading this morning, and it's staggering. So forecasts from Cox, Edmunds, and JD predict vehicle sales from July through September were less than 3.4 million, as I stated, down 13 to 14% from the same time last year, when volumes were depressed already, okay, due to the pandemic. The severe decline, including 24 to 26% fall in September, is due to the chips. Now, here's where it gets spicy. The sales pace in the U.S. market has fallen every month since reaching a peak of 18.3 million in April. We're at about 12.1 to 12.2 million in September. So we are selling, the auto industry, about 6 million less cars, okay, than we were selling on the month of April. Now, they predict vehicle supply will improve mildly in the fourth quarter, continue to improve through 2022, but won't return to normal until 2023, if ever. I debate with the if ever, folks. Market forces, as long as there's a room in that industry to be squeezing profits, supply should fill that gap to demand, which would then bring down prices. Normal economic 101, right, where supply and demand curves meet. Excuse me. Now, here's the cool part of this. Average transaction prices are going to reach a level of 42,802. That is staggering when you think about the average income of a family, and that a car for the average transaction is now almost $43,000 in September, the fourth consecutive month over $40,000. Well, folks, if you're selling cars at $40,000 a pop, and you're selling 6 million less cars a month than you were selling in April, okay? It's simple math. It's simple math with a lot of zeros. But we got $40,000 per car times the 6 million vehicles that you're missing out on is $240 billion of revenue on a monthly basis right now compared to April, that the auto industry is losing out with a potential of, you're talking about 30% drop in those sales. Watch out if that does not repair itself. Yeah. And they say that they're going to keep a leaner inventory probably going forward, which is what they talk about in terms of if ever automakers have promised to keep leaner inventories to boost vehicle profits and prices, which have been at a record level. But boy, you got to be making a lot more profit if you're giving up as an industry $240 billion every single month when you were selling 18 million vehicles back in April, and now you're only selling 12 million vehicles. Yes, you're making more per vehicle, but that on a revenue basis is pretty staggering. But guess what? On a profit basis, might actually be delivering in a bigger way. They might have been just being too lean to push out cars to be the number one automaker. All those vehicle makers cutting their profits, and maybe they're just going to be a little bit comfortable with pushing out less vehicles at a higher profit and a higher margin going forward. Staggering statistics, though, right? 240. I had to stare at those zeros a couple times and making sure I wasn't stuttering or doing something wrong there. $240 billion every single month that they're missing out on those numbers. All right, what else we got going on? Zoom and Five9 abandoned their $15 billion acquisition. Five9 shareholders rejected Zoom's agreement to buy the cloud contact center maker for what had been $14.7 billion all-stock offer. Regulators with concerns about foreign participation were reviewing the planned deal. Nonetheless, they decided to scrap that. And I believe you have Zoom trading a little bit higher on that news. Yeah, by about $7. The market liking that they're not going to be investing that kind of money, and you have Five trading a little bit lower as they won't be being bought out as well. All right, folks, we kick off October trading. When we come back, stay tuned. I'll be right back for the opening bell. We get the S&Ps up 17. I'll be right back, folks.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and we got the S&Ps up about 20 points right now to kick off October trading. You got the NASDAQ 100 up about 45 points. That's about 0.3 in the green. You got the Dow up 0.6, up 200 points. Man, you look where we were in the Dow, though, overnight. You're talking about 600 points above where we're at in the lows almost, as we're trading at 33,922. We had lows of 33,383. Russell with some big moves as well. You're talking about almost 45 points above the lows we made overnight in the Russell. Right now we're up 0.7%. We jump over to the VIX. Right now, 2244, still relatively high volatility priced into a market with swings in both directions going on. Crude contract back to $75, and we got to talk about Bitcoin hanging tough at 47,560. Interesting, you jump to Bitcoin, no real reaction, no real reason, I should say, in terms of what's driving this. Could be you had Chairman Powell said in congressional hearing Thursday that he had no intention of banning cryptocurrencies. He did, however, add that stablecoins might be appropriate for regulation. He has no plans, folks, but buyer beware there, because the Fed wants control of the money supply. And if cryptos ever become a version of money supply, which I don't think they are just yet, which is maybe why he's saying that, but if they ever gain that type of attention, I imagine regulation may be something that the Fed definitely takes a look at in a big way. But nonetheless, today, accelerating higher. Speaking of the Fed and inflation, as CNBC puts it, key inflation gauge watched by the Federal Reserve hits another 30-year high. Core inflation rose 3.6% in August from a year ago, the biggest jump in more than 30 years. Personal spending increased 0.8%, slightly higher than what the market was looking for. The core personal consumption expenditures price index, that's going to exclude food and energy. That's a debatable one, especially recently with crude at $75 and food costs through the roof. Increased 0.3% for the month and up 3.6% from a year ago. So think about that. Biggest number in 30 years if you take out crude, which is through the roof, and you take out food, which is through the roof. The monthly gain was slightly higher than the 0.2% the market was looking for, with an annual number of 3.5, highest since May of 1991, reflective of inflationary pressures that Chairman Powell said earlier this week he finds frustrating. Nonetheless, they exist, whether they're frustrating or not. On a headline basis, personal consumption expenditure rose 0.4% for the month, 4.3% year over year. That's if you include oil and food. Energy and food probably is how I should put it. That, again, highest since 1991. Reflects a 24.9% increase in energy prices and a 2.8% rise in food. Goods prices rose by 5.5%, while services increased 3.6%. The rise in inflation came as personal income increased 0.2% for the month, in line with estimates, but indicative that real income is falling as inflation rises. Did you read that? That's a big one, folks. Okay? You can't have incomes increasing 0.2% and have all of these numbers going up 4.3 and 3.6, right? 2.8 for food. Personal savings, 1.71 trillion, running at a 9.4% rate, and a decrease from 10.1% in July. That peaked at 33.8% in April of 2020, when we all kind of locked it down, when we had government rushing out payments and nobody spending money. Nonetheless, some big numbers in there in a big way. And I imagine you're going to see wages increasing too. And wages don't go down. I mean, rental prices in Florida, folks, in Tampa, you're talking about 20% in a lot of markets, rental prices going up. So add in, you got a 20% rental increase. You got 24% increase in energy prices, a 2.8% rise in food, 5.5% in goods, 3.6% in services. Are you hearing all this? That's a lot of inflation, folks, that has to be transitory at a time when we got bottlenecks and supply shortages all over the place that are going to really weaken the ability for that inflation to go away anytime soon. We're seeing it across the board. I mean, FedEx, right? This chart of FedEx is quite a wake up in terms of from 219, folks. This company is perfectly positioned. They're firing on all cylinders, except for the fact that they're dealing with inflationary tendencies. They got to deal with wage problems. They're dealing with higher costs to get things where they're going. And as a result, you just trade down $100. From 319 to 219, you are now back to where we were more than a year ago in FedEx. And really, you want to see something mind-blowing, is that you're back to where we were in 2018. Think about how many more packages are being shipped right now. Think about everything going on right now compared to where we were 4 years ago. Folks, in October of 17, you were trading between, and look at this, it's perfect. We're right where we were 4 years ago in FedEx. But that all has to do with rising costs, folks. The last quarter alone, which is where this really accelerated lower. These are weekly bars, so that was the drop. We entered that quarter at 253. They spent almost $500 million extra on the cost they were dealing with. And you see how quickly you can wipe out some of those gains when all of your profits go bye-bye, because no matter what's happened with revenue, you really have to start paying a lot more money to make that same revenue, and that's going to erode profits. And really, profits are what companies are based off of. The only time a company is based off of revenue is when they have a future plan to turn that revenue into profits. Company's worth nothing if you're not making money. A lot of companies with revenue growth will have a plan to show some substantial profits. I mean, Amazon's the best story for that for a long time, but even Amazon is facing some woes with rising costs. Anytime Amazon has some big problems, it usually has to do with rising costs. Doesn't have to do as often with decreasing revenue. But even Amazon, on their last earnings, really got ahead of themselves. They missed on the revenue front as well, and they're dealing with rising costs, I imagine, as well on that. All right, jumping around to what else we got going on in terms of headlines I got pulled up here. How about good time to be in the Keurig Dr. Pepper market, as in they are buying back $4 billion and reiterated sales and profit forecast before investors on Friday. The program's going to run from January of this coming year, 2022, all the way through December 2025, confirming an earlier report by Bloomberg. Company hasn't set a minimum number of shares to repurchase, and the future movement of its stock price and changes in the conditions could affect the size of the buyback. But as you may expect, we are actually higher a little bit this morning on Keurig Dr. Pepper. You're up 2.4% on that. Quite the run it has had recently. You were down to 18 and change. You were as high as 37 back in May, so you have pulled back a little bit. Now, what's interesting here is I think they had a merger, and maybe that's what throws this chart in a hissy. But not sure how this one shows up. I tried to see where this thing's been, and guess what, folks? They got negative prices all over the board on Keurig Dr. Pepper. I'm guessing that when this thing accelerated past zero, that we had a merger of some sort, and that's why kind of this data might be skewed. But nonetheless, Keurig Dr. Pepper giving back solid $4 billion. It's over a period, though, of 2022, 23, 24, and 25. So you're talking about 4 years. It's $1 billion a year for a buyback. Still pretty strong numbers. Jumping to a story at Disney. Scarlett Johansson and Disney going to settle the Black Widow lawsuit. Wonder how much she walked away with. I think she was suing for $50 million at least, saying that by them pushing that out to the streaming service, probably a very real argument on her behalf. Disney's up 2.1% right now. Not sure that's really correlating to that, as you got the markets rocking a little bit higher. We do have tech stocks slightly. I mean, this market giving it up a little bit to start October trading. But they settled that. Very pleased that we have been able to come to a mutual agreement with Scarlett Johansson regarding Black Widow. Contracts are going to be written in a much different way going forward, that's for sure. Because to all these celebrities, rightfully so, when they were supposed to be getting paid for box office films, they better be getting paid for streaming films with the amount of money Disney and all of them, Netflix, are making. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Well, welcome back, folks. We have all the markets pulling back a little bit on the open. We get the S&Ps up by 4 points right now. NASDAQ 100 slipping into the red by about 26. All the travel stocks they're talking about in the Tiger's Den over there rocketed higher. The cruise ships rocking higher. The airlines rocking higher. We'll start off with Carnival, up 4.78%. I couldn't track anything down. If anybody knows exactly, I mean, this could be, maybe it's that Merck antiviral as more drugs come out in terms of being able to manage the virus. Nonetheless, they're all rocking higher. So you got cruise ships up 4.6% with Carnival. We'll jump to Norwegian, up 5.8%. All right, you take a look at just travel stocks in general. Expedia, you're up 6.3%. Airbnb, you're up 2.5%. The airlines right now with American up 3.7%. Delta up 5.2%. United Airlines up 5.9%. You might see a big shift here in terms of all of these stocks rocking higher, unless I'm missing dramatic news out there. But nonetheless, all of them rocking in a big way. And let's jump to domestic airlines. JetBlue up 4.5%. You got Southwest right now up 5.4%. Big numbers there. Okay, jumping around what other stories I had pulled up here to jump through. Let's see, we did key inflation. We got auto sales. Yeah, why not on the airlines front? JetBlue revamps their website to avoid confusion with new partner American Airlines. They launched a partnership earlier this year to allow each carrier to sell one another's flights. They're updating the website to highlight more of its onboard amenities. The Justice Department sued the carriers last month, saying the alliance violated antitrust laws and will drive up fares. I imagine that would probably be true in terms of if you got two airlines teaming up to offer their fares on the same platform, maybe that's going to allow them to maintain prices at a higher price level as they team up instead of competing, which would normally be the case. Competition always helping, usually helping, I should say, the consumer when companies are competing for those same consumers. Let's jump around to some of these other equities in terms of what we have happening. Some of the stocks I like to take a look at, and this is why you have Uber taking a bid higher as well. I have to imagine maybe this is going to have to be a little bit of a transition here in terms of getting drugs that can now just orally treat COVID-19 and what that could do in terms of a game changer if you really are able to decrease the severity of this disease across the board. Uber's up 3.8% right now. You have Lyft shares trading higher as well. Lyft up about 3%. All those airlines really rocking. Even Boeing up 1.7%, catching a bid as well. And this is in the environment, folks, that we get a lot of negative action right out of the gate. Excuse me. We do have a lot of negative action right out of the gate in terms of the S&Ps now slipping in the red. You have tech stocks going in the red as well. We'll jump to some of those FANG stocks. You have Apple shares diving lower. Apple from 142 to about 140.78. You're negative by 0.5%. Microsoft shares actually in the green still. Amazon shares right now flat. Google shares, look at that, of all the big ones, right? You got Google in the positive. You got Microsoft in the positive. You got Amazon in the positive. Apple, the only one right now in the negative of some of those bigger FANG stocks, down 0.5%. Let's see how Facebook's trading. Facebook in the positive as well. Geez, if you got the NASDAQ 100 in the negative and you have all of these stocks in the green, well, there's one action. You got Netflix trading down about 1.5%. Maybe that's some of the action. If you're going to get more reopening, you're going to get more travel, you're going to get more antivirals. Maybe that's weighing on Netflix a bit, down 1.5%. Netflix has had quite a run recently, though. You put this thing on a daily, right? You were just trading at the beginning of August at $5.11. You basically gain $100 through the month of August and September, up a 20% pop. You get back some of it. You're still trading at $600, the price of Netflix. We jump over to Tesla shares. Tesla, $770, been quite a run for Tesla as well. You think about where we were in May, you were trading at $546. Right now you're trading at $771. We actually got above the highs we had back in April. The only area above this, folks, we had an area between 800 and 900 for a very brief period of time, from about January until about the middle of February. And you can see that that area we bounced at going back to the late January. This is a daily, so you're talking about January 29th. We bump up against that area in September. Probably going to be a critical area to get through, as that's quite a lofty number when you talk about the valuation we're dealing with in Tesla. You're talking about a valuation of a company valued at $770 billion when you're at these types of price tags. Let's jump around to some of the car makers this morning. We got Toyota basically flat right now. We'll jump to Ford. Up about 0.4%. The Dow's up. What's the Dow up? Dow's up about 0.2% right now. GM shares up about 0.2% as well. We jump to some of the commodities. Crude hanging at about $75. Gold contract right now at $17.59. You look where we started the week in gold, kind of right back to where we are. There's Sunday night's action. We're sitting at $17.60. You got gold right now trading at $17.58. Quite the run gold had yesterday. You put gold on the daily in terms of looking where we are. We kind of came down right to that tail in terms of where we were for gold contract at $17.59 there. Still seeing FTX. Let me refresh my chart. That's unfortunate. Hopefully that refreshes it for you. Gold contract $17.59. I was just saying we bounced kind of back right at that area we were at in early August. A bounce for gold. We did have a tail that got down there to a low of $16.77 before bouncing higher. But boy, you got to see more than that in gold. That you're at $17.59. The trend has been lower in gold for a while right now. You look where we were in June. We were at a price tag of $19.08. Is that the high? Yes, it is. $19.19. The high in crude back. Gold back in June. All right, jumping around to what else we got going on. Let's see what else we had. Yeah, bond investors, right? Brace for the worst year in decades on a hawkish Fed is the headline out there from Bloomberg. Rates surging. Emerging market dollar bond gains were wiped out last month. You take a look, worst in decades. Global bonds are headed for their biggest slump since at least 1999. Now, they got a lot of lines on this chart. The one to pay attention to, folks, if you can see my cursor, let me see if I can zoom in. There we go. We got. You know what? I'm going to expand that. That's even better. There is the black line. They could do a little bit better job representing this, but nonetheless, they got all the years on here with different colors. What you want to pay attention to, global bonds, normalized, okay, as of the coming into this year, 2021, you're talking about right here, folks. You're talking about down 4% right now as bonds headed for their biggest slump since at least 1999. And you see, compared to most other years, most years you're pulling in income, of course, when you're in bonds. But we might see some negative action there for the worst time in decades. Tough September. Monthly losses, the worst this year after reflation scourge in March. Yeah, you're talking about a 2% month-on-month change. Monthly losses, the worst. And not surprising when you take a look, folks, at the type of action that we had going on. You look at where we were to even August 4th, you were at 135. And you're trading at 132 in the 10-year, let alone you look at the 30-year, and this is just the U.S., let alone everything else going on. The U.S., we were up to almost 167. You're trading at 160 in terms of the equity suck out there, in terms of equity loss in those bonds, even though you're locking in an interest rate in theory. All right, we're 20 minutes into the trading month, and we got the S&Ps right now flat at 42.97. A little bit of a sell-off to start off the opening bell. We're trading right at 4,300. NASDAQ 100 slightly in the red. We get the Dow up 88 and the Russell positive by 1. Stay tuned, folks. I'm going to be coming back. We'll finish up the program. We'll be right back in 3 minutes. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps right now basically flat. You're positive by 1 point at 42.99. Jumping over to some statistics of how we ended the month of September. The Dow fell 4.3%, S&P 4.8%, and NASDAQ down 5.3%. For the third quarter, which ended Thursday, you had the Dow down 1.9%. The S&P actually positive for the quarter, and the NASDAQ falling 0.4%. So you take a look at September, negative prices for the quarter, pretty close to flat. A little bit of mixed action. However, you look at the year, and we're talking about gains in double digits across the board. The Dow, 10.6%. S&P, 14.7%. And the NASDAQ, 12.1% gains. We're coming into 3 months left in the year. Interesting to see with everything going on. So we get some non-farm payrolls a week from today. That starts the data roll. We then come into earnings season. Coming in, we're going to kick things off with banks. That'll be interesting. We kick things off with banks considering the run they have had recently, right? You take a look at JP Morgan, for instance. We were just trading at almost 150. Yeah, 150.49 on September 20th. Folks, you don't normally get 10 to 12% pops in banks. Just makes a high of 169.30. We give it back, but nonetheless where we've been, I mean, you really want to see from the doldrums of the 10-year yielding 0.5%. We're now at 1.5%. You had JP Morgan comfortable at 100. It's now comfortable at about 160. Bank of America was comfortable at about 25. You're now comfortable between 40 and 45 potentially. So they're going to have some lofty expectations coming into an environment that rates could be rising as they kick off earnings season. And then we just go down the line from there. See which companies can deal with those rising inflationary tendencies, can deal with the supply shortages, inflationary tendencies. We'll see. Earnings season kicking things off, but we got a little bit of negative action. Tech stocks slightly in the red as well with the NASDAQ 100, negative 65. The Dow positive by 99. Stay tuned, folks. We got our man Basil Chapman coming up next. Then, of course, we got Fast Market at 11. And don't forget, folks, kicking things off on Monday, all right? Larry's out today, but kicking things off on Monday. We got a new schedule. We got Larry Pesavento. He's going to be live at 11 o'clock a.m. He's switching it up with Fast Market. Fast Market goes at noon. Fast Market, Kevin Hincks going to be hosting that program with Tom White. Look forward to that. So new programming lineup starting on Monday with those two switches, 11 and 12. Stay tuned, folks. We got our man Basil Chapman. He's coming up live next with the Tiger Technicians Hour. Have a great Friday, everybody.